صلى الله ربنا على النور المبين أحمد المصطفى سيدي المرسلين صلى الله ربنا
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh and good day. Welcome back to my lecture. Now we are in episode 2. Let's move on to outcome number 2. Do the sales budget using Excel. Prior to that, we need to know what is the sales budget. Sales budget is developed before developing the pro forma income statement. Sales budget is an estimation of the expected volume of sales by month in order to get the volume of income in the income statement. For your information, cost of sales also can be determined from the sales budget. Measurement could be in percentage form that have been declared by the company's policy. Cost of sale should be recognized in the productions or operational department that have been mentioned in the previous episode. Cost of sales must to be incurred in the pro forma income statement. For the purpose of financial plan in the business plan, please refer to the Excel template sheet SMF. If you look at the first row, unit, can you see down there the company has been recognized? The company policy on the monthly sales forecast is 10% and a selling price at RM 150, but you can discuss with your member to determine both values. For your information guys, we have two types of sales. First, cash sales, and the second is credit sales. But for the learning purpose and financial plan purpose, we focus on cash sales only. Actually, the row for cash sales here is auto-generated. You just fill up the unit sales and unit selling price. Now let's move on to outcome number 3. Do the pro forma cash flows PFCF using Excel. Balance carry forward or projected cash available is calculated from the projected cash accumulations, or we call as cash inflows, minus projected cash disbursements or cash outflows. What is CF? CF stands for carry forward, and some books we call it as CD or carry down. The projected cash available is not the same as profit. Profit is equal to income minus with the expense that will be recognized in pro forma income statement to the next learning outcomes. But I can say that debit cash for cash inflows and credit income and credit cash outflows and debit expense. Sales may not be regarded as cash since I have been mentioned before because there are sales on credit. For the purpose of financial plan in the business plan, please refer to the Excel template sheet PFCF. Okay, now take a look at this spreadsheet or Excel. As you can see, we have cash inflows and cash outflows. What are the items in the cash inflows? We have BF or balance brought forward or BD brought down. What is this value actually? This value is the CF balance, the balance from previous month bring to the next month. No worries, this row is auto-generated. Next is the capital. Where you can find this value. This is coming from last topic, Sources of Funding and Capital by Dr. Hafizah Matnawi. I hope you can recall this because as per episode 1, the financial plan is summarizations of previous lectures relating to the cost and income for each function or department in organization. If you look at our column, stated that owes to of P, right? And this balance will be brought to the statement of financial position automatically. Next is the cash sales. How you get this value? This is coming from the monthly sales forecast that have been automatically generated from the previous sheets. And this balance will be brought to the statement of comprehensive income or income statement automatically. Total cash inflows also auto-generated. Now let's move on to the next row, cash outflows. I have subdivided cash outflows to each department in organization such as administrative, operations, and marketing. If you can see, costs and expenses and non-current assets for each department, I have subdivided into two, which are referring to costs and expenses and non-current assets. Costs and expenses here refer to any costs and expenses incurred by each department during the period, such as SSM registration, telephone installation, and utilities. Again, if you can see this picture, you may refer to the last topic, Sources of Funding and Capital by Dr. Hafiz Ahmad Nawi. One more, please consider whether the costs and expenses incurred for monthly, quarterly, and twice a year. And this balance will be brought to the statement of comprehensive income automatically. This row is for non-current assets. Non-current assets are assets cannot be changed into cash within the year, such as computer, office furniture, photocopier, and usually once a year. Total of plant, property, and equipment from administrative also auto-generated. And this balance will be brought to the statement of financial position automatically. Same procedures to operations and marketing. Total cash outflows also auto-generated. Balance CF also auto-generated, and this balance will be brought to the statement of financial position automatically.
سيدي المرسلين صلى الله ربنا على النور المبين أحمد المصطفى سيدي المرسلين صلى الله ربنا على النور